Good morning, everybody. It's Ringrose here with your rapeseed market update. What can I say? What's happened since our last report? Well, obviously, we've had a huge influx of macro influences going into the market at the moment, whether that be the elections, not just here, but in Europe, and obviously the big election that we're going to see in the US at the end of the year. That has a huge impact on money flow and where investors are going to put their money ahead of those big elections, maybe looking for some safe havens until the results are known. We've obviously got inflation that we're still battling, whether that be food inflation or monetary inflation. We've also got continued conflict, not just in Russia-Ukraine, but obviously in the Middle East, which is impacting on product and trade flow. And of course, we can't escape the fact that we're seeing, ever variable weather, whether that be in hot and dry in Australia, wet in Argentina and Brazil, or indeed wet over here in the UK and in Europe. The whole monetary flow has a huge impact on monetary exchanges, and I think can be understated when we talk about rapeseed prices. We've obviously got a huge impact between the sterling and the euro, given that we're trading into a European exchange. But not only that, we've also got a huge impact on the euro dollar because of the attractiveness to outside investor interest into the European exchanges. So they're the two big ones to look at, and we've seen big swings in those values over the last couple of weeks, obviously from the recent lows of 115 to 118 on the sterling euro, which has heavily impacted on UK rapeseed prices, but also the big dip in the euro dollar, given the fact that the European election was suddenly announced by Mr. Macron. More fundamentally, let's look at soybeans. Well, soybeans obviously trading down to the lows we've not seen since the end of April. Why? Well, demand continues to wane. I mean, we only seen China in for a couple of cargoes in the last couple of weeks, and there are only 120,000 tons a trade of US soybeans. Apart from that, we've been all waiting to see how the Brazilian and Argentinian harvest is finished and completed, waiting for the next USDA report to confirm their final tonnages. Obviously, US plantings it was underway over the last couple of weeks, and we're all waiting to see what happens in terms of weather events there. And there hasn't really been one. Yes, okay, it was hot and dry in some periods in the US, but not enough to spook the market into buying beans once again. It is looking hotter and drier in the forward forecast, and if that comes to fruition, no doubt we'll see some speculative and managed money positions taking longs back there. The USDA in June was pretty much a non-event, and it was expected to be. The big one that we were expecting to see change, if anything, was the production in Brazil on soybeans. There's obviously that big disparity that we've had over the last number of reports between private estimates and the USDA. Yes, okay, the USDA amended the crop figure down from 154,000 to 153, but there is still a disparity there, and it'd be interesting to see if they make that up in the next report or not. In Argentina, it's not so prominent. I mean, the private forecasters have been pretty close to the USDA numbers for some time now. I think within 1 million tons, USDA at 50, and I think private estimates are around 49. Barring that, there was very little to report in terms of beans. It was a relatively neutral report, apart from obviously world ending stocks for 23-24. We'll have to wait to see what happens at the end of June. Oil markets have obviously been extremely choppy, energy especially. Obviously, we saw that big shock report of increased stocks in the US, which pushed down prices to recent lows. But again, we've seen prices recover back up to over $80 on West Texas in recent weeks. Did it have an impact on veg oil prices? Not really. We obviously followed the trend down with energy pressuring veg oils. Demand still is pretty lax, but overall we haven't seen that pickup as crude's risen back up because there is no demand behind it at the moment. It's just a matter of timing. Same can be said on rapeseed and rapeseed market and canola markets, really. Winnipeg canola's dropped the best part of $80 in recent weeks. Yes, okay, we've recovered in the last 4 or 5 sessions to trade within a $10 range, but the prices are still nearing recent lows, or lows that we've not seen since back in March. Why? Well, there was a record amount of seed still to come on the market in the last couple of months, and it all flooded out in one period of time as people wanted to cash in on these higher values, and that pushed the market down quite significantly. In fact, it pushed the market down so far that the Winnipeg canola price versus the Matif rapeseed price, it nearly worked to import Canadian canola into Europe for this coming season. Rapeseed prices, again, dipped back off the highs. We managed to break through the €500 back in May, but couldn't sustain those highs with the rest of the complex falling sharply lower. Since then, we've fallen back for some pretty key support levels, I'd say. We're now trying to break that 480 on the November futures, but struggling to do so. It looks to me like with Ukrainian harvest about to start and Eastern European harvest about to start in the next couple of days, that we'll see some hedge pressure coming onto the market, given the fact that farmers are in those areas are way behind on their forward sales than they would normally would be, and that seed's likely to flow out into the market pre-Christmas. So in the short term, I'd like to see some harvest pressure, especially as European harvest starts to kick off. Obviously, it'll be all yield dependent. Higher than expected yields will create a little bit of more harvest pressure than normal, and obviously if yields behind normal, we're likely to see some support coming through. But from a range, 480 is probably the next level we've got to break. Harvest pressure could push us back down to that level of sort of the 450, 445 mark. From here on in, we've got to wait for the UK harvest. I mean, coverage is reasonably good at the moment, given the fact we've got old crops carryouts to take us through the first half of harvest. But again, it's later on in the season that we're likely going to need some European imports. What's next for rapeseed? What's to look out for? Well, obviously, if those that need harvest ought to book in their harvest storage space now. Market price wise, again, we're likely to see some pressure on nearby prices given the European harvest pressure we're expecting. Currency we need to look out for. Obviously, any dip back from the 118 sterling euro would give us lend some support to UK prices. And of course, later on in the year, we all need to be mindful of the new EDUR law that will come through into the market, which could offer some support to European protein markets. So that's one that may be beneficial to prices. That's all from me. Thank you very much.